Hey everybody, stock market hitting a new record. The Dow up over 26,000 now. This was another one of those record climbs from 25 to 26,000. The climb from 24 to 25,000 was a record. Look, I've been doing this a long time, folks. I've been doing this for 40 years. I've been a member of four exchanges, floor trader, everything else like that. And I have never seen a market like this. So in trying to come up with an explanation, because that's what I'm trying to do. I'm trying to come up with some sort of a rational explanation. Now, we know that the fiscal flows last year were very strong. The flows this year are even stronger, and they were stronger already before the tax cuts and everything else. But now with the tax cuts, with the Fed raising interest rates, as I said in many prior videos, that's a fiscal expansion, right? Because government's a net payer of interest. The central bank raises the rate, the government pays more. Did you know that during Ronald Reagan's first term, the largest single item of government expenditure, some people would say, well, it was the military. You know, Reagan was famous for building up the military. No. The largest single item of government expenditure was interest on the debt. But that was back when we had like 20% interest rates. That was the massive major stimulus that really lit a fire under the stock market back during Reagan's term. So what's happening now? Let's try to come up with a theory. Because, you know, you can call it whatever. You could call it a bubble. You could call it a mania. You can call it a melt up. I don't like to use those terms because they have no scientific meaning to them. There's nothing scientific about those terms. They're just kind of like dramatic terms, emotional terms. I like to come up with some kind of a scientific explanation. And my explanation is that this market for a long time had been undervalued in the sense that we have never had higher than 3% economic growth over what? I know over the entirety of the Obama 2 terms, and it might even go back farther than that. But all of a sudden now, because of this fiscal stimulus, because of the fiscal flows, very, very powerful, like a tsunami of money, we are now cracking into a new threshold, which 4% GDP growth is going to become the norm. And what the stock market is doing, and again, this is my explanation. You can take it or leave it, all right? What the stock market is doing now is revaluing itself, readjusting to this new reality. The reality being that 4% growth and higher even, that's possible. We can go 4, 4.5, maybe close to 5. We are now seeing the stock market vault up to a new higher threshold based on a breakout realization that the U.S. economy, as big as it is going to be putting in 4% plus GDP growth now for a while, for a long time. So that's my explanation. I try to be scientific about it. I mean, you know, if you understand the fiscal flows, like some kind of gigantic tsunami lifting everything up, right? That's what's happening. So that's my explanation. How will it stop? How will it end? Well, at some point, the Fed will definitely, and this has been kind of percolating up now since last week. You had some Fed members, most notably, you had William Dudley at the New York Fed. You had Eric Rosengren, who is the Boston Fed president. They're saying, look at asset prices. They're going crazy. They're going crazy. We got to do something, because if we don't do something, it's going to be much harder to engineer a soft landing. News flash, Eric and William. Your doing something is going to add fuel to the fire. Now, this all is going to manifest in a much higher level of inflation. It's all going to manifest in a much higher. I know some of you who are with me, you're getting frustrated. I know you're getting frustrated because we have this short bond position. And by the way, that's making money. But some of you are in this vehicle, the TBT. It's not moving that much. You got to be patient on this, people. We are in the early stages. The Fed is sitting back thinking, we'll just let this go. But I know their behavior. I know how central bankers think. I know what they are going to do. It is rote. It is playbook. I know. Do I know exactly when they're going to start to shift? No, but I already see a couple of them getting antsy about what the current situation looks like. So think of yourself at a poker table, you're reading the other players. We're getting a read on these guys. They're not, they don't bluff too well. They don't hide their look. All right? Folks, you got to be patient. I don't know how many times I've repeated that thing. Patience equals profits. Okay? Patience equals profits. You got to eliminate that desire for short-term gain. I had a guy the other day said to me, I waited 6 months and nothing's happened. 6 months is nothing. Look at the stock market. In 2015, all of 2015, the market looked terrible. In most of 2016, going all the way till the day after the election, the market went nowhere. I had people sending me emails saying, how dare you tell people, this was when I was still contributing to Real Money at TheStreet.com. How dare you write articles telling people that the S&P is going to go above 2100. How dare you write an article like that? Do you realize you're getting widows and orphans in trouble? You're exposing them to massive risk. How dare you? That is malpractice. That's what I had. And now look at it. You had to be patient all through 2015. You had to be patient all through 2016. 6 months is nothing. What's 6 months in a life? Come on, everybody. Toughen up. And yes, there will be a correction. There will be a pullback. That doesn't. There is no time ever in history where the stock market just goes straight up. Now, for many of you, this seems like it because it's been going now for what? A year, over a year. November 2016. A year and 3 months, 15 months. So it seems like an eternity. I got guys telling me, that's it, Mike. I'm out of the game. It's the Fed. They're manipulating. I guarantee you there is not a single stock on the Fed's books. Are they manipulating in a way, psychologically maybe, just by not raising interest rates, which everybody believes that rate hikes are going to be bearish for? Yeah, that's a game. That's something that doesn't even, the relationship even between the rate hikes and what happens on the economy is wrongly understood or falsely understood. But that's a whole other story. So that's my explanation. Just want to let you know. Bye-bye.